Vamos a estar live. Silencio, porfa.
Question everything, trust nothing. It's your boy, CryptoKeeper. Hopefully everybody is doing well today. I've got a special guest today. This is Pablo Escobar's nephew, actually. If you were paying attention on Twitter, I'm in Colombia, and I'm like, hey, what else do we do in Colombia? But go find Pablo's family. All right, for those of you that actually are here to see Pablo's nephew, this is actually the owner, well, I should say the creator of Valinity. This is Sergio. And Sergio, when we first met, one of the biggest things, and I want to tell everybody in the chat, I cannot see the chat. So if you guys have some questions, we've got somebody running the computer, so toss it in there. I'm a big ETH bull,
yes.
Right? I've got a lot of ETH. ETH is my biggest holding.
Yes.
And what I want to do is kind of go through what the protocol is, what it does, and kind of, break it down for people, because the reality is, for someone like myself, I have been over time scared with the large amount of ETH that I have of different problems that I could run into with different protocols. And so ultimately, when I found this and we started talking, I was like, man, this is a great idea, because my ETH is not working for me right now, right? Obviously, I'm getting price appreciation from it. But other than that, I'm just sitting there like, okay, well, price go up, and I don't have access to some of the funds. So talk to me, first of all, about yourself. Talk to me about how Valinity came to be, and kind of give me an idea of what is up with this application.
Well, Valinity, we started creating Valinity in 2019 when COVID hit. I was a big stockholder. And COVID came and all my stocks went down. So going into cryptocurrencies and saw how decentralization, transparency could work, I'm saying there has to be a way to create a protocol using decentralization and transparency to make sure that it doesn't matter what happens, any COVID, any natural disasters, any wars like what's happening right now, you're not going to get screwed over, right? Yeah. So then that's where we started looking into it. And then when we looked at cryptocurrencies, we wanted to make sure that we try to solve the three biggest problems that we saw. The first problem was rug pulls and pump and dumps. And the reason for that is that it takes a lot of people away from cryptocurrencies, because they look at it like it's just a complete scam. Right? Yep. So that's the biggest issue we wanted to resolve. The second issue was long staking periods, that users like yourself want to make some yield on your Ethereum, but will have to lock it for a long time, running some risk, and having low APY in return. The third one is, like you said, you have a large holding of ETH, but you don't have access to the liquidity. Right? There's not a good option.
Unless I want to sell it.
Unless you want to sell it.
Right.
And there's another option that you can get loans off it. But if anything happens, like it just happened a couple of weeks ago, and the market's very volatile, it goes down, all your Ethereum is gone. Right? And that hurts. Yeah. So those are the three biggest problems we looked, and that's what we're trying to solve. And that's how Valinity became to be.
So let me ask you, are you a computer? Are you a techie guy?
Yes.
Because ultimately, there's a lot of complexities. And I want to tell everybody watching, this is going to be, we're going to dive deep into this, but I want you guys to pay close attention, because we're going to try to break it down as simple as possible so that you can make money. The whole idea and the reason that we've got CryptoWarz is to help people learn to make money and figure out creative ways to make money. And I think this is one of them. So you were a techie computer type of guy, and you were into crypto, or
I'm 100% numbers guy.
Okay.
I'm very good with numbers. Okay. The tokenomics, I created it, but we partnered up with one of the biggest, best developing firm based out of California, Iterate, to actually develop the whole protocol. And then we also partnered up with the biggest #1 auditing firm to make sure that everything was secure, which is CertTech, and where we can look into that as well. Okay. But myself is just looking at the numbers. How can we get something out of it? I looked and saw things from the past, like when the dollar was backed by gold, and took things from there and brought it back.
Super creative. I'm always looking for new ways to earn yield.
Yes.
And when I don't have access to my money and it's just sitting there, it's like, hey, hodl strong, boys, and you're just waiting, and it gets difficult for sure.
It gets hard.
Let's walk through this. Let's talk through, how do I make money? What does this look like? Kind of take me through it from the start.
First, let's go into it. We're going to look into the formula of how it actually works. It's very simple. People think it's a bit complicated, but if we scroll down to where it says the formula, you can see right now the amount of Ethereum we have generated is 1,193 Ethereums. Okay. That has been generated from minting of the token. So the token itself, Valinity, can only come into existence by minting it using Ethereum. Okay. Right? Now, that Ethereum then is divided by all the coins in circulation, which right now is 12 million coins. And you have that Ethereum backing those coins, just like when gold was backing the dollar.
It's a gold standard for ETH.
Exactly.
Okay.
So now you have a token that's 100% backed by that ETH.
Okay.
The great thing about our protocol is that Ethereum is accessible to you.
Okay.
So right now, if you divide 1,193 Ethereums that we have generated, and you divide it by the 12 million coins that are circulation, you have a 0.0098 Ethereums per V.
Okay.
So as soon as you have access to that V, you buy it in the market. As soon as you have it, you can reverse stake it and get that 0.0098 ETH.
Okay.
And the Valinity is still yours. You didn't liquidate it. You just got the Ethereum that's backing it. So you get liquidity instantly.
So you get it on both sides effectively.
Yes.
You got the Valinity, you got the ETH, and then I have the comfort of knowing, hey, all of my ETH that I'm like putting up here, it is backed by Valinity.
Yes, exactly. The great thing about it is that you don't have to worry about liquidation because this is not a loan. You're just getting the Ethereum that's backing the actual token that you have, right? It's just like if when the dollar is backed by gold, you just give the dollar, you get the gold, but the dollar is still yours, right?
Right.
And then you could just switch it back and forth. It's the same thing essentially.
Let me ask you this, and we'll play devil's advocate here. Like the crypto space is scary.
Yes,
and a lot of people getting in. You talked about earlier, like rug pulls and other problems that we run into. There's always risk in everything, right?
Yes.
So what is, just being candid with you, right? What is the risk for everybody that's watching if they're like, hey, you know what? I want to check this out. I want to be able to access this. What's the overall biggest risk that would become involved with it?
The biggest risk is Ethereum.
Okay.
Right? Because we're pegged to Ethereum.
Right.
So if Ethereum goes down, essentially we go down as well in value. And other than that is that Ethereum network gets hacked. Right. So is there a risk? Yes. Is it low? Yes. Right. You're depending on the infrastructure of Ethereum, right? Because our smart contracts, we're going to talk about them. There are 3 of them. They're very simple to understand. Anyone can go look at them. And not only that they've been audited by the best firm, you can look at the scores, you can get audited by anyone else. They're completely closed, right? So
it's open source though.
It's open source, 100%.
Okay.
So what are the risks? One, that Ethereum dumps, or something happens and someone hacks the smart contracts, which is we don't want to say impossible, but it is very low.
It's next to and ultimately, let's look at it this way: if ETH dumps, and I'm just holding ETH, I'm still hurt. Right? It's still. I mean, I'm still suffering from the dump.
You're still getting the same downside.
Yeah.
Right.
So let's talk tokenomics real quick. Is this an infinite number of tokens that can be created because no matter what, like that's the only way the Valinity is created, so it can go infinitely, but it's all directly backed 1-to-1 effectively by Ethereum.
So it's 1-to-1. You can only create Valinity by minting it. So if the market is in high demand, and we'll go look into that a little bit further down the road, if the market is high demand and the price is higher than the price that you can mint it, essentially the market's going to rather mint than buy from the market, right? So they'll mint and sell for a profit and make the market go down to hit where the minting level, the minting level is. Is there a limit? Yes, it's 7 billion coins. There's a limit, but that will only come into circulation depending on the demand, right? If the price never gets to the minting level, so we can talk about it later. Right now, the price is around I think 38 cents per coin, but to mint is around 60. Right. So right now, no one's going to really mint. They're just going to buy from the market. But when the market gets up to a higher level than minting, people will mint. So the only way that Valinity will come into existence if the market exceeds it. There is no token allocation here and no unlocking period. So that's one of the great things about pump and dumps that we try to resolve, that you don't have to worry that there is a wallet with a whole bunch of Valinity that's going to dump it into the market.
So you have no ability as the creator of this to dump the market.
It's 100% pump and dump proof. We'll look into that more down the line, so the users get to know how it actually works. But the great thing is that my Valinity that I hold, I had to mint it myself. Of course, I minted it at the lowest price when it came out, around like 2 cents. But I actually put in that Ethereum. So a lot of that Ethereum there is also mine.
So let's take the next step into it to kind of further understand what's going on with the protocol. Take me through the next step.
So right now, right here, we have 2 smart contracts. We have the first one that holds all the Ethereum. You can see that we have generated 1,193 Ethereums, right? But of that 1,903 Ethereums, 1,115 have been claimed, right? How do they do that? Users have given the Valinity, they've staked it in our second smart contract, what's here, and received that Ethereum. And that smart contract, there's still 78 Ethereums available. So it's $247,000. So if you can click on that where it says view contract underneath the circle thing right here. Yeah, click view contract. You scroll down a little bit. And you click it, it takes you to the smart contract where you can see the $250,000 in there that users have decided for X or Y reason not to claim it, right? If we go back to the website.
And why would they not claim it? They're just sitting on it waiting for more price appreciation?
No.
Or what?
Because when you stake Valinity to claim the Ethereum, there's a small burn that happens depending on the Ethereum that you've claimed, right? So if you claimed X amount of Ethereum, it's going to charge you 1%, but in Valinity. And those coins are going out of circulation. What does that create? The same amount of Ethereum backing less coins. So it's creating that the amount of Ethereum backing each coin is growing. The whole purpose of the whole protocol is to consistently grow more Ethereum per V. So right now you can see it's 0.0098, but hopefully in the next interview we have, you'll see it's a little bit more, then a little bit more, a little bit more. It's never going to go under that. It's just going to stay stagnant or go up. Meanwhile, the ecosystem grows. So why would people not want to claim it? It's because they don't want to have that burn. They already understand that that ETH is there. They already know it's locked. They don't want to access it for X or Y reason. So they don't want to have that burn. And now when they need liquidity, like just say right now, like you, I want to get some money for X or Y reason, then they reverse stake it and get a big amount of Ethereum.
And let's talk that real quick, just kind of an idea. Let's say, I'm not even, you can throw out a number, but let's say I have X amount of Valinity.
Yes.
And I want a certain amount of ETH. I want access. Yes. Let's say I want to jump around and play around with some shit coins or whatever, right?
Yes.
Is there a percentage that I'm able to access, or is there a time period where that changes?
No, right now, each Valinity, you can access 0.0098 ETH, right? That's how much it is right now. But the whole protocol is meant to grow that amount of Ethereum per V. Through burning, through minting, through transaction fees, all that, it generates more Ethereum per V. So right now you get into it, right? In the market, you can get it at 38 cents, but right away you come here and you get 31 cents. Right away. And you still hold the 100% of your Valinity. So we'll do that later on in the interview. I want you to go through it so you can see that this is creating a low risk, high reward, because you already get 80% of your money out, right? You already have it, your Ethereum in your wallet, but you still own 100% of the Valinity, and then you can appreciate it on the upside, but you have low side risk. And on top of that, it's going to keep generating even more Ethereum for you. Meanwhile, they're staked. So you're going to see more yield available. Meanwhile, the ecosystem is growing.
It feels like a win-win to me for those of you that are watching. Again, like the whole idea here is to be able to grow your bags. That's what we always want to do. And we want to grow our bags with the littlest amount of risk possible. And so that was one of the things that drew me to this. I was like, wow, feels a little complicated, but once you've broken it down for me,
it's not
and
that
you really
much.
Look at it, it's not that crazy.
It's like the same thing as, of course, I don't want to compare, everyone compares their project to Bitcoin. But Bitcoin is not as complicated when you get it. It's very easy. It's decentralized, transparent, and a limit supply. That's it. Right? That is the same thing. Here, it is complicated because it's new. But when people get it, they understand it's just very simple. Each coin is backed by a certain amount of Ethereum, and every transaction is just generating more Ethereum for it. Instead of us taking the money, it's just giving it back there for the ecosystem to keep growing.
If I take some ETH off the table,
is
it actually off the table, or what's happening kind of behind the scenes?
That's the great thing about it. So right now, you see that 1,193? That's a true locked value. That would never go down. Because you mint it, right? It goes into the protocol. You have your Valinity, but to access it, you have to give your Valinity for it. So that's always going to have the value for it.
It's the give and take there.
Yes,
it's sitting there.
So it's always sitting there. So it's always going to generate. So you're always going to see 1,193 Ethereum and go up. It's just strictly go up. So it's out of the table because you have it in your pocket and you can do whatever you want with it, which is great. But it's not out of the table of the system. It keeps growing the system even when it's out of it. Right?
Fantastic.
A great thing about this, as well as many things that we're going to talk about it, is that if you can see, our stake is 94% of our tokens are staked. That means those tokens cannot be sold unless users give back the Ethereum they claimed. That majority of people are not going to want to do, right? The reason for that is because there's a big incentive to stake it, to claim a whole bunch of the Ethereum right away and keep generating. So what that's going to do is that people are going to buy from the liquidity pool, take it out of there and lock it here, doing a consistent price appreciation in the market.
That incentivizes the whole ecosystem to grow,
Yes.
which was the point from the beginning.
Yes, because it's going to just buy from the liquidity pools, right, from all the exchanges around the world that we're going to be at, and lock it in our smart contract. They're not going to be able to sell. But people are not going to mad about that because they're getting a big chunk right away. It's going to keep generating until you get 100% back, and it's going to keep generating forever.
It's genius, man. I love it. I absolutely, like, when we're going to go through this later for all of you watching, I'm going to pull this up. I'm going to share my screen on the TV behind me, and we're going to go through an actual transaction and show you guys how this works. So take me through next steps. What do we got going on?
So now let's keep scrolling down. Here, what we're going to have is the 12 reasons that Valinity is such a great product, right? We're going to go through this very quickly because we already talked about this a little bit. The first one is that each V is backed by ETH. So you're not buying a shitcoin. You're not buying X product that has nothing back in it. You're buying something that's generating ETH. The second one is that you can receive that ETH instantly. As soon as you buy it, you can receive that ETH. You have access to it as fast as you want. Third, V is always consistently generating more ETH. For that reason, it's always going to outpace the price performance of Ethereum. So if Ethereum goes up 20%, we're going to go up 30%. But it's the same thing on the downside. If Ethereum goes down 20%, we only go down 10%. Just giving you some numbers. Why? Because each coin is just generating more and more and more Ethereum behind it. Right?
So on both sides of it, it can be helpful.
Yes, it's helpful. Right? 5, you can only mint Valinity using Ethereum. So it's not something I could just press a button and just mint, right? It's something that actually has value. People have to give value to actually get it, right? 6, it prevents rug pulls and pump and dumps. The reason for that is because it has 100% liquidity in our smart contracts. So even if the rug pull is happening in the exchanges, you still have liquidity here. And majority of the market already took that liquidity by staking it, right? So there's no possibility for rug pulls or pump and dumps. 7, that all that ETH is used to consistently grow our TLV. So our total locked value is going to keep on growing. Our ecosystem is going to keep on growing. Number 8 is that this Valinity is always liquid, right? So even if they're staked and you just want to get out of the market because X or Y reason, you need more money, right? And the Ethereum that's generated is not enough, you just pay back that Ethereum and sell it in the market, right? So it's always liquid. 9, every single transaction benefits the community, from minting, from transaction fees on the exchange, from fees.
It's all creating a burn.
All that's creating a burn, leaving coins out of circulation, leaving more Ethereum in the protocol for the remaining V. 10, 0 token allocation or lock-in period. So here, everyone that holds this Ethereum, this Valinity, has minted it itself, have bought into the project itself. It's not like we gave some to marketing, some to VCs, some to developers. No, everyone that actually holds it, believes into the project, has bought into it. And the great thing is that it has no unlocking period, so you're not worried about, oh, it's going to unlock X amount this date, the price is going to dump, right? Its multi-asset potential is because after we grow with Ethereum, the next step is to add now Bitcoin. So now you can now generate not only Ethereum, but you're going to generate Bitcoin. And under the Valinity token, you're not going to only have 1,193 Ethereum, you're going to have a whole bunch of Bitcoin, right? And then we're going to add other assets as well. So basically, you holding Valinity, you're holding like the SP500, the top more strong coins.
An index at that point.
Exactly, and generating more coins for you. All that's just generating more for you and can arbitrage between all of them. So a lot right now, they're talking a lot about BlackRock, right? BlackRock is the biggest company in the world, right? Because they manage everyone's money and they buy all these properties, now Bitcoins and all this kind of stuff, and they have a lot of safe with it. This is basically a decentralized, transparent BlackRock where we all benefit same. I'm going to benefit the same way as the last token holder because every burn just benefits all the coins the same, right? And all the minting benefits everyone the same. So when you hold V, you're just holding all these great assets, and we're all benefiting from it together.
Which is really cool because a lot of times, whoever the creator of the token is the person that's, the big dog on the horse, and they have the ability to really manipulate what's actually happening. And that's not in.
And that's here. And like that. We're gonna, at the end of it, you're gonna see something we call the Valinity effect, and it's gonna be like, even if I want to, I can't you can't screw people over because it has unlimited liquidity on the downside and unlimited liquidity on the top side, right? So you can't manipulate the market that much, right?
That's huge.
And the great thing about this is that for myself, I really believe in this product that I don't want to sell unless I need to, because it's always generating over Ethereum for me. So I have a whole bunch of Valinity. Why would I ever sell if it's going to keep generating Ethereum for me at a high pace?
Yeah, for sure.
And I have access to it instantly, right?
For sure.
And the last one is arbitrage, is that because we are going to add all these different assets, right? So let's say Bitcoin pumps more than Ethereum. So people can reverse stake at Bitcoin and buy at Ethereum, right? With the same token, right? So it's going to have all those transactions that are going to benefit the ecosystem, because all those transactions, all those trading is going to have a burn, right? Sure. So those are the 12 reasons. We can now go a little bit further down. We're going to see this chart where it says outperforming Ethereum. So since we launched to Ethereum, you can see the gold line is Valinity, the gray line is Ethereum, and you see the gap between it. It is getting more and more and more and more and more thicker. But we're still very volatile because we're a small market cap, right? And we're just getting out to the market. So you see those dumps that happen, and that right now is happening as well. Those is going to happen. Meanwhile, we start growing our community. We only have around 370 holders. So because we just started to market, so you're probably basically our second until we were doing, and you're going to have those bumps. But these dumps are actually a great opportunity, just like we're doing right now. So you see a dump to 38 cents for X or Y reason. We're going to go to the next screen. We're going to see why someone just sold the big bag. But that's a great opportunity because you're going to buy it at 38 cents and right away reverse stake it and get 31 cents. So when those things happen in other markets, it'll be like, oh, panic. No, when this happens here, it's a great opportunity.
It's an opportunity as long as you're able to continue to put some capital in play.
Yes, because you could right away buy it, reverse stake it, and you still have your capital here. Like 80% of your capital.
That's great.
And then even if it dumps more, you still have that capital to do it again. But it won't never dump under the yield rate, right? So the yield rate is 31 cents. You'll know it will never go under it, because why would I sell something that I can stake it and get the same exact?
It would be stupid.
It would be stupid. And if that does happen, well, what I would just do, I would buy it, let's say, at 30 cents and reverse stake it at 31. I just made free ETH.
You just made some money.
I just made free ETH and got the validity and behind. So you're going to see through time, this gap between the two are just going to get bigger and bigger and bigger. We're going to have these little volatiles. We already have like around 4 of them. But you're going to see them go less and less and less. And that separation between Validity and Ethereum is going to get bigger and bigger. Now, when the market sees that and they believe into the product, they'll be like, why would I ever hold Ethereum instead of Validity?
When I can hold something that's creating it and I still have
access to it. Exactly. I can hold Validity that's going always outpace Ethereum because it's going to keep generating it. I have access to it as well, and it's going to generate more Ethereum. And on the upside, it's always, and on the downside, going to outperform Ethereum, right? So we can keep scrolling down. Here's, like we said, there's no token allocation. These coins have been minted. Everyone has to add Ethereum for it to get them. So there's no token allocation for us, the founding team, or VCs or marketing, etc., which is really good because it makes all of us equal, right? So like I said at the beginning, I come from stocks, and a lot of time in those stocks, those people have a huge advantage, right? And that's what drove me a little bit more into cryptocurrency, because crypto is the same thing as stocks. It's just more decentralized, more transparent. Of course, it has its problems, just like the stock market has its problems as well. But it is evolution. It is consistently getting better. And one of those is this: not having an advantage of just printing more stock for myself, or printing or minting more coins for myself, right? That if I want to do that, I have to actually add more ETH, which I'm going to keep doing. I'm going to make my wallet public so everyone can see the amount of coins that I have, and I'm just going to consistently buy. Why wouldn't I if I can just access more ETH?
Be that open book to everybody. I will tell you, people will love seeing that because they want to have faith a lot of times people will come out with a project, and the only point of the project is for the creator to make money. That's it, right? And ultimately, if everybody is making money, and I can see that the owner, the person that created this, is continuing to add and not the opposite, it just speaks volumes for the project.
I believe 100% in what I built. Right, this took him 5 years, millions of dollars to build, and I believe in it 100%. And I'm gonna buy as much as I can. And it's gonna generate more Ethereum for me. Of course, let's say we need to close a big deal, like we need to give Binance X amount of liquidity or whatever. I have to sell, but for the community to keep on growing, right? So I am gonna have that open book. I've done it in one of our videos, monthly calls. I show my wallet. I have right now like 6 million coins, so half of it right now is mine, and they're reverse staked. So you can imagine those 6 million coins times 0.0098 Ethereum. How much have I already made? I made a lot. I already taken that out. Why would I ever take this out if those 6 million is going to keep generating for me? Right. I will only do that to keep growing the community, keep growing the ecosystem. Right.
Yeah, for sure.
So let's go down a little bit more. And here is our tokenomics. So everyone's probably thinking like, this sounds amazing. This is too good. This is too good to be true. Right. How does it work? Right. It just like Bitcoin. It's very simple. It's decentralized, transparent, limit supply, right? Okay, it's not too good to be true. If you add those three things together, it's going to give a value. This is how it works, right? We have 3 smart contracts. The first one is called the revenue cycle treasury. This is the smart contract that can only be minted Valinity, right? This is the only way that Valinity can come into circulation. And the way you do that is you add Ethereum and it gives you Valinity at an X price, right? Now, 100% of that Ethereum is sent to our second smart contract called the Year Right Treasury, which is the smart contract we saw before that has all that ETH, right? That smart contract holds all the Ethereum that's backing all the coins. And that Ethereum is accessible by reverse staking. Reverse staking is sending your Valinity to the third smart contract. It's locking it there, and it's giving you the Ethereum that's backing each coin.
It's a nice little cycle.
It's a very nice cycle. And now when that reverse staking smart contract every month has a small burn, depending on the Ethereum that people have claimed, and it sends it back to the revenue cycle treasury, taking them out of circulation, waiting there to be reminted again by the demand if they need it.
I don't know how you thought this up, because this is wild to me. But I think
I'm happy you're here. And I think hopefully that your community takes advantage of this, because this is going to be one of those big interviews. People are like, oh, it's the first time that Valinity came out. Right. How
long has it been out and accessible?
So I started working on this when COVID happened. Right. Lost a lot of money. Lost. I went. I don't want to talk too much a little bit about my upbringing, but went from not being too financially good, right, coming from Colombia, all this kind of stuff, to making a lot of money with stocks, working my ass off to gain capital, cleaning windows, cleaning bathrooms, doing interlocking, to raise some capital, buy some stocks, and then out of nowhere, I'm from zero to having over $20 million in paper, right? And then COVID comes and cleans that. It's a hammer, right? But I always good a number guy, always been good in business. And I think business is a lot of people, I try to show it as like sports. A lot of people think business is boxing. It's 1 against 1. And I feel like business is not that. Business is more like football. It's a team effort. Everyone. Right.
For sure.
So especially in cryptocurrency, I've been seeing that a lot. You know, they're fighting, Cardano over Ethereum. It's like we're all the same team. Right. To push decentralization and transparency. Right. So then I saw, like, how do I create a product that gets the best thing of economy back where it was the gold back in the dollar? How can I use decentralization and transparency to create even something better that, yes, Ethereum is backing each coin, but instead of the banks taking all the money from interest, from all the banks taking money from transaction fees, we just give that back to the community so it's to just keep on growing together, right? So it took a lot, 3 years of tokenomics, getting everything clean. After we got that, we looked into what it was the best developing firm. We're going to talk about them a little bit. Got with them, Iterate, very expensive, but very worth it. They were very good. And they actually became partners of the project. And then after that, with finished that, we're like, let's look for the security. Then we got Certec, and we'll look a little bit into that. So that's a little bit of the backstory of how Valinity came. Keep talking about this a little bit on the tokenomics. If we scroll down, we actually see the flow of funds that you spoke about. Yeah. It's like a little cycle, right? Yeah. So you have the revenue cycle treasury that mints, sends the Ethereum to the yield rate treasury. That Ethereum now is accessible by staking it to reverse staking treasury, and that creates a little burn that sends it back to the revenue cycle treasury along with all the transaction fees. Yeah. So it's just you have one token consistently just generating more Ethereum. And the great thing about it is that you could either hold it because you trust in the product, you trust into the market, and that you know that your Ethereum is locked in that smart contract and you don't want to have that burn. Or if you need access it to, like right now, you have all that Ethereum, you want some access to it, you can reverse stake it, get a whole bunch of it, don't have to worry about liquidation, and it's going to keep generating more Ethereum on the long run. You still have the appreciation of 100% of your bag. Yeah,
it's everything that I've been looking for in terms of wanting to access my capital but still be safe as possible with it. So many times I've looked at different ideas, and I know like last cycle there was a lot of people offering 89,000% APY, and I'm like, listen, that's not sustainable whatsoever. That is going to crash. There's just no way around it. And as long as you trust in the Ethereum blockchain, and the protocol works as said, it's just a win.
And the great thing about this, so for right now, we in the last 4 months, our APY has been around 10%, 11%, and that's stagnant. Yeah. And that's only been coming from people that have been claimed the Ethereum and has that small burn. Yeah. But now we just launched our liquidity pool, and people are buying and selling, and those transaction fees are getting so now our APY next month.
So the burn you're gonna is going see it more and more.
You're gonna see it. Our APY is gonna be at the 1st of May. Keep an eye on it because it's gonna be much higher than 11%. Nice. Right? But people understand why. Yeah. Right? It's not like, hey, I'm going to give you 30, 40, 50 APY. You don't understand why. You'll see why. Right? It's very simple when you actually get into it.
Yeah. No, I love that because ultimately, like when I do want that access, cool, I've got it. And then I know that I'm also helping the overall community at the same time as I'm accessing capital. It's genius. I like it a lot.
Perfect. So we go down. Here's where we talk about the Valinity effect. This is like my favorite graph. First, you have the first gold line that you see on the top. That is the revenue cycle treasury and the price that it's willing to mint at, right? And that's always 2 times the price of the yield rate. So the yield rate is the amount of Ethereum you'll get for each token that's being held by the yield rate treasury we see in the bottom, right? The reason that is 2 times is that because when people mint, it adds double the Ethereum than coins in circulation, increasing the Ethereum back in each coin. So increasing the yield rate, right? So it's always 2 times. And you can see that every single transaction from burning from staking and transaction fees take coins out of circulation, leaving more Ethereum, increasing the yield rate. Yeah. So if you see the bottom line, it's always growing up. And as soon as it grows up, the mint value also goes up, right? And now you have the market buying and selling between those 2 price points, right? But it's always on a trajectory on the upside against Ethereum. So we're always going to outpace Ethereum. It's always going to go on the upside. And the great thing that happens is, like, for example, it gets overbought. So it goes, the price of the market goes over the price that you can mint it. You just mint it and sell it, quick profit.
And you burn profit.
Right? Yeah. Just quickly. Yeah. And so the market will do that. And when that happens, what they're doing is that they're taking liquidity from the market and adding it into our total locked value, minting more Valinity, adding more Ethereum into the protocol. It just benefits everyone. Yeah. And if it gets oversold, right, that gets under the price that right now is 31 cents in Ethereum. If it gets oversold, you just buy it and you reverse stake it, quick Ethereum you made, and you still hold that Ethereum, right? So it's just, you know, it can't be pumped. It cannot be dumped. Yeah. There's no rug pull. It's impossible to do it with those 2 liquidities. Unlimited liquidity to mint and unlimited liquidity to get the yield, to get the Ethereum.
The community controls it.
The community controls it because it's through smart contracts. Yeah. It's transparent. It's decentralized. And it's what we feel that DeFi was really meant to be. Yeah. That's why we say Valinity, what DeFi was really meant to be.
Yeah, I'm tired of paying all these banks to basically hold my money,
Yes.
And when I want to access my money, if it's a certain amount, well, we're going to put a hold on that.
Oh.
And then, oh yeah, by the way, what kind of an interest rate am I yielding? 0.1%.
Because they're loaning it out.
You.
They're
loaning it out, and they're earning
5,
10, 15, 25% on it. It's absolutely crazy. And I love the idea of being able to be a part of the growth of the token. It helps me and it helps other people.
Yes.
I love it.
Then this is very exciting. And now that hopefully the community and your people, if they have any questions or concerns, I'm also putting myself out there that they can book a call directly with me.
Okay.
So cool. we'll see that a little bit down. I want to talk about CertTech before we get into that. So now people are thinking, wow, this is great. It makes sense, right? It's generating all this great sense.
Yeah.
How do we make sure that this is secure?
Yeah.
So if we go down to where it says CertTech here, I would like people to go to CoinMarketCap.
Okay.
Go to first Bitcoin. You see it has no audits because it's Bitcoin.
Yeah.
Ethereum has no audits because it's Bitcoin.
Yep.
But if you go to USDT on CoinMarketCap, you go down, it says CertTech.
CertTech. Yep.
You go to Binance, it says CertTech.
Yep.
You go to XRP, it says CertTech.
Yep.
Crypto.com, CertTech. I can go all along. They're the biggest auditing firm, right?
Yep.
We partnered with them 2 years ago. They did a full audit, not only on the protocol, not only on the smart contracts, not only on our website, but they also did a deep dive on us.
Yeah.
So if you see that where it says KYC Gold, so they did a deep dive on us, make sure deep dive on Iterate, see how big of a company they are, to verify that this is a real project with real people behind it, with real money behind it. And they certified us, and we have in the top 10% of security in the whole market. And this is our second interview. We're literally just going to the market.
Yeah.
So not only that we have great tokenomics, unique, patent pending, only to us.
Yep.
We have one of the best developing firms, which was Iterate, that created this whole project. And now we have the number one auditing firm of CertTech that gives us a stamp of approval that this is secure. That what is the risk if Ethereum goes down or if Ethereum gets hacked?
Right.
Other than that, there's no risk.
For people that understand, the CertTech audit it's tough. There is a lot that goes into it to be able
and
to
very
get that. It's super expensive.
A lot of time.
Yeah, you can tell when something is CertTech audited that they have spent a ton of money and a ton of time. And why am I going to spend a ton of money and a ton of time to ultimately try to scam and scheme? Because no, there's a lot easier ways to do that. We can do that with meme coins.
Yes,
right?
And the great thing about this is that this is a project that's here today. It's going to be here this bull run. It's going to be here next bull run. It's going to be here the other bull run.
Right.
This is a top 100 coin.
Yeah.
We're not going to be there maybe in a month or 2 years, but we're going to get there because this is for the long run, right? Yeah. We worked 5 years, millions of dollars, not to create something caca, to actually grow the cryptocurrency community, because I do believe that decentralization, transparency is the future. That's the where we have to go, not only through finance, but also through governance.
So we look at the market cap. Let me just ask on this. So a lot of times the people in crypto, they look at the market cap. They say, oh, this is $3 billion. And I believe we can do a 25x to get to 75 billion, whatever the case may be. Where are we at right now on the market cap? And is that going to be a similar comparison where you have maybe a projection? This is not financial advice, right? But I'm just kind of throwing out there the
idea. I wanted to
say
that.
What do you think?
So right now we have a market cap of $6 million, right? This is very little.
Super low cap.
Very low. Yeah. I don't want to put numbers there because I do have to be careful. I am the public figure, right? And we have all these problems with the SEC trying to slow cryptocurrency and transparency down. So we have to be careful. But I have a very safe way for you to make your own prediction. Okay. So what is your prediction on Ethereum?
To go this bull run?
Yes.
I'm conservative, and I think 8K.
Okay, so that would be what, a 3x?
2.5. Yeah.
Okay, that's a 2.5. If Ethereum does 2.5, because we're backed by Ethereum, we're going to instantly do that 2.5, right? Now, think about how much are we going to grow? Being so low cap, being 6 million, being only 380 holders, I would say at least 2.5. That'd be very conservative. Right. That means we did a 5x right away.
Right.
Because depending on how much we grow, we multiply that by the same amount that ETH grows. Yeah. Right. So a lot of people say ETH 5x, 10x. And then you say, okay, this is great tokenomics, great company behind it, great audits, great everything.
All the things.
How much is this going to multiply?
Yeah.
You multiply that by ETH, You got your prediction.
Boom. I like it. I like it. You just hear so many people throw out these wildly,
Yes.
just bullish numbers. And it's great. And
I personally, I do have crazy numbers in my brain.
Right.
Right.
But I get it.
But I don't, because I want everyone to actually look into it and get it.
Yeah. But understand it for themselves.
Understand it for themselves.
Assess for yourself.
Exactly.
When people ask about portfolio, what should I have, and this, that, and the third, like it's hard because the reality is I don't know your financial situation. I don't know what your risk tolerance looks like. I don't know some of these things. Exactly. I don't know how much access you need to capital. Those are all things you have to answer for yourself. So I'll challenge everybody. It's Valinity.io if you guys are looking for the website so that you can check out all the stuff that we're looking at to take a deeper dive into it if you want to obviously check this out.
Now, if you scroll down, here's the one of the what I was talking about. You can book a call directly with me. Okay. So one of the things that I saw that I didn't like when COVID happened, and I'm a big shareholder in a lot of big companies, I want to contact the CEO. Like, yo, what's the game plan? Right. What's happening? Right. What are we doing? What are we doing? I'm a big shareholder, right? I should have that access. So here is that you can mint, right? 2,500 Valinity. You minted from the revenue cycle treasury, right? So you're getting those coins and you're helping the community grow. And you book a call directly with me, and you have 40 minutes of my time to ask me any questions, any concerns, what's coming up in the future. You have that access directly to me. And that's something I didn't see with blockchain, and even with cryptocurrencies and with stocks. And I'm like, and I felt really bad. I lost $20 million in a couple of days. I want some answers, right? So then I'm giving that opportunity to the people that your community can come in, book a call with me, and you have that time.
And it's cool too because you have put yourself as the creator out there. It's your face. Yes. It's you. Yes. You're the one taking the call. Yes. So ultimately, like that's exposing yourself to showing how much you believe in what you've created.
Yes, I believe in it 100%. Yeah. I don't have that background, like say, like
so you're Charles, not Pablo.
I'm not Pablo Escobar. I'm not that. Of course. I really want to work a lot if this grows to help Colombia and actually get away from that, because Colombia has a lot of things to benefit to show. We have, like, have you seen? You've been here for a couple of days. We have beautiful land. The food is amazing. We generate gold. We generate emeralds. We generate the best coffee out there. Tourists are coming. They love in the cities. It's very safe, not like what other people think. So one of my missions is, after we're growing this, is actually showing people how great Colombia is. Yes, exactly. We already have a couple plans here. We're very, very close to the police force here. We're already trying to see which community we're going to start building houses and stuff like that. I don't want to speak about that yet, but that's the plans with Valinity growing. And I really want, especially Colombia and South America, to be one of the first people to adopt this. Because it's gonna of course help. It's your home. It's my home. It's gonna help everyone, right? Yeah, for sure. Now, what we're going to jump into is that we're going to go into the market. So you can go to Dex Tools, Dex Screener. And here you're going to be able to see what's been going on since we launched. Right now we have around 378 holders. You can see it right there. And right now we have around $384,000 in liquidity. We're going to lock that. We just added that in the last couple of days. With some liquidity providers. Just got added. It just got added.
So that'll turn green for those of you wondering.
Those are gonna. That's gonna turn 100% green. And in a couple more weeks, we're gonna add another 500. So we're gonna have around $1 million. And liquidity locked. So it's great. Not only we have $3.8 million in liquidity generated from minting. Right now we have $1 million in liquidity.
So that people can get in and
out.
Get
in and out, exactly,
they can move. That's so often.
It's amazing.
So often, like, you'll see somebody, they'll say they've got this huge bag. And I'm like, hey, good luck selling that. Because there is not enough liquidity in the liquidity pool for you to be able to get out of that without dumping the entire thing. And you're going to kill yourself in the process. And
the great thing about it is that we remember the Valinity effect.
Right.
Even if this is not locked, let's go. We're going to lock it, right? But let's say it comes the day to unlock it and we just take everything out. You don't have to worry about that.
Shitload,
exactly. You don't have to worry about that because you have the liquidity through smart contracts. You already have it there, right? So that's one of the great things about it. I would also recommend everyone to go here where it says holders. So if you can see right here, I'm going to show you guys. If you go down to where it says transactions, holders right there, you click on it. What you're gonna see is you're gonna have the first one that holds
That's you.
4.4 million. No, hopefully, I wish, but no. But if you click on that, that's the staking protocol.
Yeah.
That's where all the Valinity is staked.
Right.
Out of the 12 million, 11 million are staked. On a smart contract, those Valinity are locked unless they give back the Ethereum to sell it.
Right.
And if they did, they just added more Ethereum into the protocol, right? So
exactly.
you'll see that.
Yeah.
The second one is the revenue cycle treasury, whereas the Valinity is being mint. Right. So all those transactions from transaction fees on the exchange and the mint, it's just sending it back. Those coins are actually not in circulation.
And the little fees that happen are also
being
in
sent,
that cycle being sent back, right?
So what I want people to know, right? They come and look at it. Those two ones are the smart contracts. They can click it. Yeah. They're the same ones on our website. They're the same ones audited by CertTech. Those are locked. Can only work through the process of actually using the protocol. Yeah. Right. And then the second one is the Uniswap liquidity locking. Right. Right. And then we're gonna add a little bit more. And you can see the majority of the people, right? My wallet is not even there because the majority of mine are staked. 100% are staked. Yeah. People don't really have to hold it. Yeah. To actually access the liquidity. Right. So that's one thing. That's a really cool thing that I like to point out. So now I don't know if you have any questions, concerns. I would like you to actually come in. Yep. Right. Buy some Valinity, okay, and reverse stake it. Okay. So we can share.
All right, so we're gonna jump on real quick, and we're gonna actually let you guys watch a transaction. Do you have it?
2107.
We're doing this in real time, so you guys can see this happening.
Yes. All right. So yes. So first thing, let's open up the DApp, right? So you can launch DApp. Okay.
So we're going into the DApp right now. I thought I had the, there we go. Okay.
Then you press connect to wallet, and we're gonna put wallet connect, and you're gonna use Uniswap, right? Yep. So we're gonna just connect to Uniswap. Click on Uniswap. Okay. And open.
Okay, there it is.
Perfect. So you're there, right?
All right, guys. So this is literally just a normal Uniswap transaction. I know everybody that watches us obviously knows what's happening with Uniswap. Once they connect to your wallet, connect. So you're going to connect. You're saying, hey, I want to do this. All right, so we've got 0.3 ETH in this. Yes. What do we want to buy? Like 0.2, 0.25?
So then put max. Just press max, okay, and let's take away $100. So you're going to buy $800.
By $800. Okay.
So you can click on where it says 894. You can click on it, so it can go on the upside. Yeah. There you go, and just take away $94. Just put 00. That way you have something for.
All right, so we're making the transaction right now. Let's see what the gas fees are looking like right now. Network cost $19. Swap, Face ID, doing the whole thing, and it is pending. So just doing the normal Uniswap thing for everybody that's watching. As this is happening, did it go?
Yeah, I think it can go. So you go back. Okay. Yeah, you go back on the. There, you have the Valinity right there.
There we go.
You were gonna ask me a question?
Oh, I was just asking. Like there was a peer-to-peer option that I thought was in the grand scheme of things that we kind of talked about.
Yes.
Is that still something that's happening?
Still happening? That is basically a smart contract that users can create an ad or respond to an ad decentralized through a smart contract. Yeah. And that's gonna come added later on.
Okay, that's getting added later.
Added on.
And I'm telling secrets now. Yeah. I'm in trouble.
No, it's in the roadmap.
Yeah,
you can see it in the roadmap. And the great thing about that P2P is that for users don't have to unstake to sell their staked Valinity. Right. So from the staked Valinity, they create an ad, and when users buy from it, it just gives back the Ethereum they've claimed automatically. Yeah. So it just gives it a just easier process instead of just adding Ethereum, then bringing it here, then selling it in the market for those staked Valinity. It just makes the staked Valinity more liquid. Right. Right.
So I can literally go to Clay the Great, somebody that I guarantee is watching right now, and say, hey, let's make this transaction happen. Yes. And how do you have an idea of how long it'll be before that'll be?
We're gonna add it. Right now, we're gonna do 2 months, 3 months of marketing, getting people into it. Right. Yeah. After that, we're gonna do our governance voting to people, see if the community accepts Bitcoin. Yep. If they accept Bitcoin, then after we're going to add that. Yeah. So yeah, it's a great option for just people that want to sell their Validity and that they have it staked. So it's just an easier process. And not only that, it's a little bit cheaper because there's not going to be liquidity provider fees.
Okay.
So, you know, here people are making money off liquidity, right? If you go to the exchanges, they're making money. Over there, it's going to be a little bit cheaper, the transaction fees and stuff like that. So now here you have purchased Validity, you have it. Now if you can go to the website, back to the website. Yeah.
Sharing this?
Oh, no, Tommy.
Oh, it got cut off. Okay.
It cut off just now.
It got cut off. Yeah.
Okay, can you go press refresh on top?
Hit refresh.
You see that staking pool.
Yeah.
So it shows you the amount of Validity that you have staked, right? The value of it in the market, which is $798, and how much you've claimed on the left side, which is $632.
Okay.
So if you go back to your Uniswap wallet, you have and you refresh it, you have your Ethereum back there.
Yep.
Right. So you have your Ethereum.
That's super cool.
Right. You have your Ethereum in your wallet. You can take it out, do whatever.
Yep.
And then you go back to Validity.
Yep.
You have 100% of what you just bought, but you took out 80% of it. Right. And not only that, where it says yield available, meanwhile, the ecosystem grows.
Yeah.
Is going to generate more yield. That yield rate per coin is going to go up, and you're going to have more Ethereum, until it generated 100% of what you put in.
Yeah.
So right now you put in $800.
Yeah.
You got 632.
Yeah.
It's going to eventually generate enough that you already took out $800.
And
it's going to keep generating forever.
It's going to keep going.
It's going to keep generating forever. Meanwhile, the ecosystem grows. And if you still need more money, right, then you just unstake it, right, and you sell it in the market.
And you can just sell it out
because you already see the profit. Yeah, you already see the difference of the profit you'll get. But what we did is that we created a protocol or a coin that you don't want to sell. Why would you ever sell something that's going to de-risk you like 80%, going to go and take 100% one time, and then keep generating forever? Yeah. So what's that doing? It's the demand is going to buy it from the protocols, bring it here, lock it, you just have upward pressure.
The reality is all that needs to happen is marketing at this point.
All it needs to happen is
with
people
some good marketing behind this, and people start to use it and say, hey, listen, like not only.
How do you feel right now? Is it a lot of
great.
people when they do it, they're like, this is a money glitch. It's literally
it's like the infinite money glitch.
Yes, I just generated some money.
Yeah,
and
absolutely.
the great thing now is that if you want to, there's the protocol gives you opportunity of what you want to do. So right now, let's say you want to have more exposure.
Yeah.
You just get that same Ethereum, you buy more, reverse stake it, buy more, reverse stake it, buy more, reverse stake it. Now with the same capital, you just bought a whole bunch of Valinity that's backed by Ethereum. So you just bought a whole bunch of Ethereum.
I didn't even think about that.
If I wanted
to add 10 grand into my portfolio or whatever, I could do it through here.
Yes.
Damn.
And with the same capital, you just got a whole bunch.
Yeah.
If you want to be a little bit more conservative, you just buy, reverse stake, and that's it.
Yeah.
And now there's another way also that this protocol creates the opportunity for you to create more Ethereum for you.
Okay.
How the way you do that is that you buy, you reverse stake that Ethereum, you turn it into fiat. And if Ethereum dumps a Valinity stumps, with that same fiat, you buy, right? Because
you're taking advantage of dips.
Yes. So you have, but you have still the whole profit on the upside.
Yeah.
Right. So you have no risk that, oh my God, I'm selling. Right. You don't have to time the market.
Sitting there. Yep. You don't have to time anything.
So a lot of what you do is CryptoWarz, trading wars.
Yep.
That basically is people that have a lot of, you have to have a skill for this.
Yeah.
To actually time the market.
Oh, yeah.
That 90% of the people don't and lose money.
Yeah.
Right. But here is a way to do it that you don't have to time it at all.
Yeah.
Because you buy, reverse stake, you turn that into fiat. On the upside, you're benefiting, and then on the downside, you just use that fiat and you buy more and do the same. So you're just generating more Ethereum.
Yeah.
So there are 3 ways that you can do it, depending. If you want to get more exposure, you buy reverse stake, and get a whole bunch.
Yep.
Second is that you just buy reverse stake, and that's it.
Yep.
You're
hold.
out.
Yep.
Hold to keep generating until you're 100% out of the project.
Yep.
And the third one is to have that fiat ready for when it dumps.
For the dumps. Well, I don't know. I got to get out of here because I ultimately need to go buy a whole bunch more Valinity. Because I understood it. Obviously, we've been talking. We've been, this is one of our channel sponsors. Just throwing that out there, guys. This is a sponsored AMA. But ultimately, until I actually did it and saw it, I understood the idea of everything around it, and it was super cool. But until actually doing it and seeing how simple it was, if you're into crypto, right? You gotta have some crypto. Yeah, you gotta have some crypto.
Deal with Uniswap. Deal with
I just love the fact that it gives me the opportunity to do something positive with my Ethereum and not have to feel like every day I'm checking because I've got this massive amount of risk.
Yes.
That's it. That's really what it comes down to for me.
Yes.
So, well, it's been fantastic. Thank you very much for having me over. You have a beautiful place.
Thank you.
Crypto fam, I love you guys. I appreciate each and every one of you for being here. It's Valinity.io. Their link is down below the stream. And then it's also at Valinity DeFi on X.
Yes. So Valinity DeFi, that's all of our socials.
Okay.
What we do with our socials is that we do monthly reports.
Okay.
We show you guys how much has been burnt, how much Ethereum has been generated, how many holders we have. I take that also from the stock market, like our monthly reports.
Yeah,
right.
Sure.
So I try to take the best from everything and develop it into this. So you guys have that there. And we're going to hopefully have more content coming out.
Yeah, for sure.
More interviews, you guys. Also, I'm there for you guys to book a meeting if you guys want to come and meet me personally.
Cool. Well, Crypto fam, you heard it here first. Check out Valinity. I love you guys. You could have been anywhere on what is today? Wednesday? It's vacation. So, I had to think about the day. You could have been anywhere, but you're here with CryptoWarz on a Wednesday. Question everything, trust nothing. And until next time, hodl. Valinity, it's hot. We'll see you soon. We hit the end screen at the end. Yep, right there. And then hit yes, play. Yep.